Background and History Digi Company. Mission, Vision and Objective. Vision. Missions. And lastly, Objective. Digi is telecommunication industry in communication sector.
Next is acid test ratio. As a result shows, the quit ratio is decreased by year, which is start from 0.75 times in 2018 and 0.65 times in 2019, and 2020 is at least 0.55. With this reduction, Digi company has problem in paying short-term debt by using current asset.
Okay, the efficiency ratios. First, we have the average collection period. Based on the chart given, we can see that the average collection period in 2018 is 81 days and in 2019 is 70 days. Based on this chart, we can see that the company are not efficient in collecting their debt and customer is not paying their debt back according to the credit term in 2018. And so the company start improving in 2019 and in 2020, because in 2020 they just only need 57 days to collect all back their debt. Even though it's just a small improvement, the company should try to be better in the future and need to urge their customer by paying their debt according to the credit term. The second one is the inventory turnover. Based on the chart above, we can see that the inventory turnover shows lower in 2020, which is 11.21 times compared to 2019, 15.85 times. This indicates that the company having overstock in inventory and poor sales or marketing strategies. As we can see, the highest one is in 2018, which is 25.24 times. This is because Digi making a new prepaid broadband at that time, and this make Digi more popular among people. Okay, the third one is the total asset turnover. Based on the graph line that we see before, we know that Digi have been declining for over 3 years straight since 2018. This shows that the company did not fully utilize the total asset in generating the sales. The sales have been poorly sold over the year, which the total asset turnover in 2018 and 2019 is 1.05 times and 0.77 times. The lowest total asset turnover is in 2020, which is 0.75 times. The last one for efficiency ratios is fixed asset turnover. Okay, Digi company fixed asset turnover show declining ratio from 2018, which is 1.05 times, to 2019, which is 1.00 times. It shows the decreased ratio of the company. This indicates that the company business is over-invested in the fixed asset. The company also has made a large investment in fixed asset with a time delay before the new assets start generating revenues. Furthermore, the revenue is decreased over the year 2020, which is 0.92 times. Okay, first, I will tell you about leverage. Okay, in leverage, we have debt ratio. Okay, based on the chart that we see, the debt ratio of Digi shows a big increase in 2020, which is 92.6% compared to 2019 and 2018, which is 91.9% and 81.15%. From the financial statement that we refer, we can see that the company are getting more current liabilities compared to non-current liabilities. However, it gives impacts toward the company debt ratio. The capability of the company depends to asset in paying debt. Okay, the second one is debt to equity ratio. Based on the chart that we see, the debt to equity ratio show high increase from 2018 to 2020. In 2020, it was 1,251.24% compared to 2018 and 2019, which is 821.89% and 1,134.79%. The result shows the company are depending to debt financing compared to equity financing. Apart from that, it also shows that the company are risky toward the investor and it also may affect the company to bankruptcy. It because the low capability to pay off their debt. Okay, the last one for leverage is time interest earned. Alright, the time interest earned show that it has been declining since 2018 to 2020. The lowest is in 2020, which is 8.63 times compared to 2018 and 2019, which is 16.99 times and 9.19 times. This shows that Digi has lowest ability to pay interest obligation using operating profit. If the company fail to meet their obligation to pay interest rate, this will be leading them to bankruptcy.
Thank you, Mohd Fikri, for your explanation. So we go to the profitability ratio part. The profitability ratio is divided into four, namely net profit margin. We can see that the net profit margin of Digi company experienced a decrease of 90.84% in 2020 compared to 2019 and 2018, which is 22.74% and 23.61%. This shows that this company cannot translate more of its sale into a better profit at the end of the 2020 period, possibly due to the sale price offered to the customer being too expensive compared to other telecommunication company. So we know that price change greatly affect how many units a company can sell, in turn affect the overall profit. So my suggestion is that Digi company should lower the price of product, so that those sold in order to attract customers to buy a product and can re-establish net profit margin. Next is the operating profit margin. Before that, operating profit margin was how much income was left after creating a variable or operating cost that had been paid. So we can see that the operating profit margin of Digi company experienced a decrease of 29.82% in 2020 compared to 2019 and 2018. Which is 33.72% and 33.85%. This shows that the Digi company is experiencing a decline in sale and will result in a decrease in the company's operating profit because the company depend on operation to generate income. So my suggestion is that the Digi company should review all expenses for the cost of goods sold. That is, product that receive less response should be changed to a better product, or stop the production of product first so that there is no loss in making the cost of the goods sale. Next, in the return on asset, we can see once again there is a decrease like other ratio, which is 40.91% in 2020 compared to 2019 and 2018, which is 70.58% and 24.83%. This shows that the Digi company is not very efficient in managing its asset to generate profit in the 3 years. Not only that, it can choose investor to invest less in the Digi company because the return on investment they receive is low profit. Last but not least, the final part of the profitability ratio that we will discuss is the return on equity. We know that the return on equity serves as an indicator of how effectively management use equity financing to finance operation in a growing the company. So, in the chart show, we can see that the return on equity decreased by 201.53% in 2020 compared to 2019 and 2018, which is 270.12% and 228.88%. And find that this company is not efficient in managing equity financing for grow the company. This is because the company main operating expenses are too high, such as overhead expenses and cost of the goods sold. Therefore, in my opinion, the Digi company needs to reduce the cost of expenses, such as discontinuing product that are not well received by customer in order to be able to eliminate inefficient costs and subsequently be able to reestablish profit. So we go to the next part is about market ratio. In market ratio, they have earning per share and dividend per share. As that chart given, we can see that the earning per share ratio show that it has been declining for 3 consecutive years. In 2020, the EPS ratio is 0.157 ringgit, which is the lowest compared to 2018 and 2019. In 2018, it was 0.198 ringgit, while in 2019, the EPS are 0.184 ringgit. This show that the company don't have profitable and did not have more profit to distribute to the shareholder. I suggest that the company should try to gain more investor to invest in the company and keep a trust between the investor and the company by making the ratio higher in the next year. The second one in the market ratio is dividend per share. Following the chart, we can understand that the dividend per share Digi company experienced a decrease in share per unit in years 2020, which is 0.164 ringgit per unit, compared to 2019 is 0.186 ringgit per unit. The highest one was in 2018, which is 0.194 ringgit per unit. This decreasing happened likely because of our current situation, like COVID-19 pandemic that occurred in the end of year 2019 until now. So my suggestion that the company should try to expand their product sale to ASEAN market and create a lot of a new product based on consumer taste.
Conclusions of our assignment. Company performances dropped for the last 3 years. Worldwide pandemic COVID-19 affected the overall performance and current economic condition in the whole world. So Digi need to plan new strategy to improve overall company performances. That's all from us. Thank you.